And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. So let's not waste a minute here. I'll go ahead and share what we are going to be reviewing today. As always, we're going to take a look at the current markets. And many of you may know, hitting a new high, so certainly generally constructive there. And then also going to share with you upside resistance, and from there go into downtrend reversals. So these are going to be stocks that are still experiencing resistance to the upside and then moving right into those reversals. Also building your watch list going into earnings. And really, there's never a bad time to be getting your watch list together. But as we get into earnings season, you can see how impactful earnings have been on the markets and then also on individual stocks. So if you have a list that is due to report and you see it bullishly respond, you can be prepared. Also, we did see a new industry group. It was Awakened on news. I'll share that with you, and then we'll drill down and take a look at some underlying stocks, and then all about earnings. And of course, this is a big part of my work. Those stocks that go on to outperform the broader markets will have strong earnings in their characteristics. That's one of the primary drivers. Within my MEM Edge report, every 4 out of this past week's 5 days, I had 1, 2, and in one case 3 of the top performing S&P 500 stocks on each of those days. And it's all about earnings. So very critical. We'll get into that as we move on further today. But before we do that, let's take a look at some of the more impactful news that as a backdrop to why the markets behaved the way they did, if you will. We did see consumer confidence improving in October. And of course, consumer is 2/3 of US GDP. So we want that confidence to be high so that consumers continue to spend and help the economy expand. Of course, we talked about it briefly, but we'll get into it more, that earnings reports did in fact dominate market action. It was a real stock pickers market, I would say, even though the broader market indices generally had a good week. We can definitely point to particularly some of these mega cap stocks that are moving the markets. And consumer spending was strong. Another area for that GDP, we did get robust wage gains that were reported. This is going to be pointing to prolonged inflation because wage gains, of course, will at some point be passed on. They already are being passed on to the cost of goods. So that is something to bear in mind as it relates to the markets. And then we did see jobless claims again come in at a new pandemic low. That is good news. Jobless claims again reducing. But next week we have could be a pivotal week. We have Wednesday, the FOMC is going to be releasing their meeting notes. It's going to be all about whether there is an anticipation that the Fed will in fact reduce their bond buying, so in fact tighten monetary policy. So we'll see if that does take place, and of course how the markets respond. In turn, that will at some point convert into higher interest rates. And so also next week, October, unemployment is going to be released, and then manufacturing data that also has been market moving in the past. So from here, let's get right into it and take a look at the broader markets. We're starting here with the daily chart of the S&P 500, and we can see that it did edge to a new high in price. The S&P was up about 1.2% on the week. And then also your outside momentum indicators, RSI trending upward and above that net neutral 50, positive there. I use a faster moving stochastic momentum indicator. This is also in a bullish position above that 50, trending higher. So overall, the broader market strength is in place. The markets are in a nice uptrend. So, as usual, let's drill down. We want to look behind the broader markets and, in essence, uncover where that strength is. And the purpose here, of course, as always, is for you to capitalize on that strength, always with an eye toward outperforming the broader markets. So, let's take a look. XLY, this is consumer discretionary, up 4.3% this week. And really a little bit of an anomaly there. This was all about auto stocks. Tesla up 20% for the week. I know my subscribers know all about that. We've had Tesla on our list for several weeks now, but also within discretionary, there were other select areas as well that we will get into, but for the most part, it was those autos that drove that sector higher. From there, we can see technology had a nice week, up 2% more than the S&P 500, and we can see this nice uptrend. This is XLK. As we move on, I'll highlight where the strength in technology is, but of course, this from my work, I do specialize in these higher growth stocks, so I want to see technology outperforming. Healthcare is a sector, for those that watch my show each week, you'll know that we've been on the lookout for this downtrend reversal. We identified it last week, and it did carry on further. The healthcare sector was up another area higher than the S&P 500, and very select areas here as well. And a lot of it is these mega cap pharma stocks that are coming in with good numbers, responding. And then another area as well that we'll get into as it relates to healthcare. And then real estate REIT stocks. I did write an article last Friday about this is an incredible hedge against inflation. I would urge you, not now, but later, you can go to Chart Watchers or up to the articles tab here and access that article all about using REITs as a hedge. So of course, we also want to be fully aware of the weaker areas, make sure you're not overweighted. This is communication services, a lot of these internet related stocks, Snap comes to mind, and others in that internet related area that are just not doing well. They are not coming out. Twitter with good numbers, the ad sales just are not there. So from here, we're going to drill down even further. Again, on the lookout for that area of strength. So I have the industrials, the small cap stocks here, also Brent crude, software, semis, and so on. So I like to put this RSI, that relative strength indicator, and we are looking at a 2-month daily price chart in descending area. And take a look. This is up here in the forefront, transportation stocks. They were more flat this week than not, but still in a very confirmed uptrend. And this is all about rail and trucking stocks that are continuing to come in with good numbers. And as we move on, these are the broader market indices. NASDAQ up here in the forefront, up 2.5% this week. Again, mega cap and tech helping that area out. But as we move on, take a look. This is the software, tech software ETF. IGV is the ticker symbol. And this is an area that we picked up on here on that break back above these simple moving averages. We did have TEAM as one of only 4 semi. We had Microsoft TEAM, 2 big top performers on our MEM Edge report, taking advantage of this downtrend reversal here. So as we move on, semiconductors also outperformed this week, and that was another area where we had the biggest winner for the week there in large cap semis. But let's go ahead and move on, because we want to take a look at these, I want to say weaker areas, but this is the yield on the 10-year treasury, and we can see that it did dip this week. So in turn, it did impact, I want to make sure I have it on here, and in fact, I don't. So let's just take a very quick look at regional banks. This is another area that we've been all over participating in this downtrend reversal, but we did get a pullback this week, for the most part, an ideal buying opportunity. But this is all about that lowered yield, in turn, reducing potential profit margins. So that is a look at the bigger picture markets. And then, of course, we've gone ahead and drilled down. From here, I did want to spend a few minutes sharing with you some of these names that have had and are still experiencing upside resistance. And this is more of an educational practice to help you when you're looking at charts, or even if you own these stocks. This is Akamai. And Akamai was a big winner going into this peak here in August that a lot of these growth stocks did in fact experience. But however, it has not been able to get back into play. So what I did want to point out to you is in the use of these simple moving averages. I have a red 50-day. This is a purplish 21-day, and then that 10-day simple moving average. So what will happen when stocks reverse their uptrend? They will then oftentimes attempt to go back into an uptrend, but take a look how clear-cut the upside resistance at these moving averages is. And this is something I've been doing this for so many years. And so when even working with professional money managers, really just informing them how important it is to be aware that this is, as these moving averages trend lower, your upside resistance is at a lower and lower level. So eventually we do get that downtrend reversal attempt, which we did here with Akamai, but take a look, it was unable to penetrate above this 200 and above that 50-day, even though we did get, you might get head faked by these outside momentum indicators turning positive, but not so for my work. I'm going to need to see it break above those longer term moving averages before being interesting. Let's take a look at a couple of other examples here. Coca, this is going to be another software stock. And really this one peaked back here in February, but a little bit sloppy, but more to the point where you have these reversal attempts. You may get, again, head faked into it, but until you penetrate above that longer term, you're just not well served to attempt to get into the stock. It's the reversal's not really there. So here's Chipotle CMG, and this has been a big winner from my report in the past, but we have not participated here. We can see this break back here at the end of September, and this is in line with the broader markets suffering during this period. But let's take a look at the current environment where the stock is attempting to reverse that downtrend. Now we have that phenomenon where the shorter term moving averages are potentially, well, they're certainly heading south as they trend lower. That resistance conceivably will be at lower and lower level. Another big winner, I have a couple of watch lists, and I really keep my eye on these names that have been big winners for my report for the markets in the past. But let's take a look at PayPal. Once it broke key support, again, that upside resistance almost made it up above that 50. I know they had an announcement of a potential proposed deal that was not well received, but more to the point here is that upside resistance that we are seeing. And let's see, I think I have one last name that I can share with you here. This is going to be a cyclical name, 3M. So upon this break, upside being met with resistance. So I think I made the point there. We're going to take a brief break. From there, I'm going to show you downtrend reversals out of these upside resistance trades and lots more to cover. So stick around. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. As mentioned, I am going to go ahead and share with you some downtrend reversals that have taken shape. This is another MEM Edge report special where we did capitalize on this downtrend reversal back here, added it to our suggested holdings list. And the primary characteristic is that break back above that 50-day simple moving average on volume, with your outside momentum indicators confirming that, turning positive. So as the stock advances, you want that volume to continue. It's indicating that the accumulation is in place. Investors want in, and then subsequently we did have this big gap up here on earnings, and the stock remains in a nice uptrend. So let's take a look at a couple of other names. Now that's an example, of course, of one that worked. Let's take a look at another one that is in the throes. This is KO. They did report their earnings this week, and they were really quite strong. So we can see this stock was in a downtrend. The earnings pushed the stock back above that 50-day simple moving average, gap up on its way to a nice potential base breakout here. And in addition to providing strong quarterly results, they also guided higher. The company has been able to increase pricing in the face of inflation, and it is not dampening sales. And we are seeing that for those of you that are interested in consumer staples. Coke, I believe, has a 2.1% yield. That this is playing out in other areas within staples as well. So I wanted to also from here point out to you downtrend reversals that fizzled. I think you're going to recognize a theme this week, but this is something that I find very, very important to be aware of, because for me, I'm going to be on the prowl for those former big winners. I know they have the capability to trade higher and faster, and I want to be in front of them when they potentially reverse their downtrend. So let's just take a quick look here at this more recent. Now, the stock did gap down even more. It was down about 8% on weaker numbers. But what I did want to point out to you is this downtrend reversal attempt. And I definitely had this on my watch list, was getting a little excited that it might take shape. But I will say the volume characteristics were not there for me. We can see, let's go ahead down, draw our eye down. We barely got into positive territory here with the MACD. And then this higher volume day here around September 15th was on negative, on the downside. So when you see your higher volume on days where the stock trades down, that is distribution. And we can very simply just go back to this August period. This is all about distribution, heavy volume. Very simply, you want the stock that you own to be having that higher volume on those up days. So again, big volume today on SBUX on the downside. Let's take a look at another tempted one that this is another one that I had on my radar because they came out with very strong numbers here, but also management had nothing but positive things to say about the future. So I'm not saying that HPQ's downtrend reversal is done. We could see it continue higher. For my work, I prefer to see a UPS type name where it has volume and it continues to march higher. HPQ looks constructive, but not as interesting as other potential names. So let's take a look at, again, reversals on the maybe side of things. This is Chewy, CHWY. They are the largest online retailer of all things pets, pet products, and they've had many periods. The company is not currently producing earnings. They do have strong revenues, but I've been watching this. They have these downtrend reversal attempts that continually fizzle, if you will. I'm going to go ahead and pull up a little bit of a larger chart here because there was definitely a period. This was all about lockdown and people actually getting more pets as they were able to stay home with them. So let's take a look at the current dynamics here with CHWY. We can see that it has broken up above this 10-day and then the purple 21-day and the 50-day. So certainly looking quite interesting. We're getting nice high volume characteristics, nice outside momentum indicators. But again, from my work, I will want to see it break above this downward trending 200-day, which is at 83. Shorter term investors, you may potentially play this 76 to 83 area because it does look poised to trade higher, but one of those almost there type names. And then we can also take a look at a couple of other stocks, and this is another retailer, Five Below. Now let's take a look because we can see that the stock had this huge distribution, big volume. So it's going to have to get above these levels, but it's just inching above. It's nothing too exciting at this point in time. But again, it historically has that ability to have a lengthy upside. I would say we're not quite there yet. I'm going to need to see a few more days to the upside for that name. And let's see if we can pull out one other name that is on that maybe list. This is an industrial stock, Illinois sorry, Illinois Tool Works, ITW. So we can see where it had this precipitous drop back here, actually a pretty big decline from that 230 down to 200. That's about a 15% decline, but we are seeing the stock breaking back above these, all of its moving averages with your outside momentum indicators positive. I'm not as tuned into this stock. I would need to know what might possibly be driving it fundamentally. So from here, let's go ahead and see if there's anything else. Actually, there is another area that we can take a look at. And I mentioned that this past week, there is a group that I would say is newer as far as the underlying stocks within the area finally turning bullish. So we're going to take a look at Bloom Energy just to get us started here. This is all about alternative energy. So a couple of news items that came out as it relates to fuel cells, also hydrogen, in addition to Biden on Thursday putting out his infrastructure plan. He did increase renewable energy spending. That was good news. Also, there was a privately held aircraft manufacturer that announced that they're developing a entirely hydrogen-driven aircraft that is due to be out and ready over the next 2 to 3 years. That really got the industry going. But BE is Bloom Energy, and they actually announced a deal last week with a South Korean company. They are going to be selling fuel cells. It's going to be worth about $4.5 billion to the company from 22 to 25. So let's take a look again, downtrend reversal, gap up above this 200-day simple moving average, huge volume, nice increased volume as the stock continues to advance. So from here, we can take a look at a couple of other stocks in this industry space. PLUG, this was a big winner for me. I think I was up about 420% on this move back here. So have this definitely on my watch list forever, hoping that we'll get back into that kind of an uptrending period. And this was also infrastructure bill related when Biden got elected late last year and propelled the stock higher. So we can see PLUG breaking back above this 200-day simple moving average, nice volume characteristics. Now we've seen that occur 2 other times. So I will want to see it advance a bit further above, but we did get a nice base breakout here. We did get nice volume, and it's not just the infrastructure bill. PLUG has announced multiple recent deals around hydrogen in the transportation space, and that is a broadening out of their portfolio. So one for the watch list. We can take a look at another name here in alternative energy, and this one was a little bit earlier in its downtrend reversal here, breaking back above the 200-day simple moving average. What occurs from there is your shorter term simple moving averages will then begin to break back above the longer term, and that's known as a golden cross. It's a secondary indicator, but it is positive. Let's see if we can, here's a alternative energy company that did report earnings on the 26th. And take a look, gap out, base breakout, nice uptrend, big volume. So lots going on in this industry group. So I definitely wanted to make you aware of that. SEDG, they're due to report late Tuesday, another gap up into an uptrend. And a lot of these guys are going to be reporting their earnings next week, SPWR. So we'll be reporting next week. So keep these on your watch list, as I mentioned to you before, because you want to be aware. So a couple of other names I may have time here for that are going to be reporting next week, and you may want to put them on your watch list. ROK is Rockwell Automation. They are due to report on Tuesday. Now, I will say some of these automation defense-related stocks did suffer last week. Let's see if I can pull up a couple of names here. This is Lockheed Martin, big gap down. So we did see, unfortunately, a number of names in that area, but ROK setting up for a base breakout. ETN is due to report on Tuesday as well. This is another diversified industrial name, and it's a name on my radar because it had been a big winner for us. They're all about energy as far as regulating energy. And so we can see it's broken back above this 50-day on its way to a potential base breakout due to report on Tuesday. I think I mentioned that. Another name in an entirely different period. This is Polo Ralph Lauren. RL is the ticker, but I'm on the lookout for a potential base breakout. And they're due to report on Tuesday. But again, the ability is there when you see these names that have the potential to outperform the markets. For me, I have several watch lists that I like to keep on top of these names to see if they're potentially coming back into play. This is PerkinElmer, PKI, and they are in the medical products, medical supplies space. That's been a very strong area over the last 2 weeks. I know some of their revenues are derived from COVID-related kits and so forth, but I'm going to need to see a break back above that 50-day as your outside momentum indicators are firming up. And then a couple of other names in this healthcare space, Bio-Rad, BIO, big winner back here, potentially reversing its downtrend on the way to a base breakout. So lots of really interesting names going that are out there. But I did want to also, before we get excited about earnings going into buying stocks going into earnings, you need to be aware of the potential downside. This is Zendesk, ZEN. In addition to reporting weak numbers down 14%, they also had an acquisition that was not very well received, but more on the earnings side. This is Garmin, GRMN. A couple of things, you can see that downtrend reversal failure, but take a look at this huge volume. So we can't leave without taking a look at SNAP, really to inform you that when you see these stocks gap down on really big volume, you'd have to go back to this late fall last year earnings period to see volume that high. That is basically you do not want to, it's catching a falling knife if you try and purchase these stocks that are really dropping following earnings. So that's it. Everyone have a great weekend. Please use that link below to trial my MEM Edge report. I have a special offer I did point out to you, and it's not the only week where we are highlighting the top outperformers before they outperform the market. So I hope you'll join the many happy subscribers. And go ahead and hit that like button if you like what you've seen, and I'm going to look for you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.